For my entire career in the public securities markets, I've been a research analyst and portfolio manager specializing in small and mid-cap stocks. The stock market and its sectors over time experience periods of undervaluation and overvaluation. Currently, small and mid-cap stocks appear to be in a period of extreme undervaluation. For the last 10 years, small and mid-cap stocks, as indexed by the Russell 2000, have underperformed the Standard & Poor's 500 indexes. Funds inflows into the S&P 500 index funds and ETFs have been huge, while small and mid-cap stocks have experienced net outflows. AlphaVest Capital offers investors a diversification in equity investing versus what appears to be S&P 500 overvaluation. Pressing small and mid-cap stocks down is the lack of research on these sectors of the stock market. 80% of the equities with market caps less than 250 million have no research coverage at all. Small and mid-cap stocks that do have research coverage tend to have that coverage because they've paid investment banking fees to the sell-side securities firms. Therefore, this research for the most part is not unbiased. The second major trend affecting small and mid-cap stocks is the absolute decline in the number of publicly traded stocks. In the past 15 years, the number of listed companies has declined from 8,500 to 4,500. During the same period of time, initial public offerings issued annually have declined from 1,000 to 200. The reason being that many successful entrepreneurs have decided that being public is too expensive and too regulatory constrictive. Good growth companies can stay private and get the growth capital they need from private equity. Several years ago, Michael Dell took his company private, saying that being private unleashed his employees to innovate more for the customers. The main reason being that private advantaged the customer was that Dell no longer had to meet Wall Street's strict earnings growth expectations. If extra spending was needed for customer innovation, being private accommodated that need. The third major trend affecting small and mid-cap stocks is that private equity has become the tail that wags the dog. 5 years ago, private equity was $1 trillion in assets under management. Now that's $5 trillion. Private equity is now overfunded with uninvested cash greatly exceeding investment opportunities. One source recently estimated that overfunding is currently at $1.5 trillion. In response, private equity will now bid for public companies at multiples higher than those that prevail for companies in their own internal portfolio. Recently, Warren Buffett's Berkshire Hathaway was outbid by Apollo, a private equity firm, for a large public tech company. In summary, from the abyss of non-S&P 500 and non-researched small and mid-cap stocks, AlphaVest Capital identifies and writes research on some very attractive investment opportunities. Catalysts such as regulatory approval, a dramatic increase in growth, or a buyout by a public or private company could be pending. It is the mission of AlphaVest Capital to search for these opportunities and to provide research on each selection. The overriding goal of AlphaVest Capital is to outperform the S&P 500 index. Since our start in October 2019, the portfolio is up 8.6% versus 11% for the index. With up to 20 names in the model portfolio, there is diversification, but also the potential for meaningful portfolio impact. If you think what you've heard in this video could help you achieve your investment goals, we offer 2 levels of service, Alpha and Omega. The former provides research on our model portfolio names, along with research on our bullpen names, which are companies we are monitoring for possible additions someday to the model portfolio. The Omega service has all the Alpha features plus access to me via cell phone or email. Thank you for your interest. Happy investing.